Welcome to a Purple Chips tutorial webinar. I'm John Schwinghamer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. The information contained in this presentation is based on the criteria of the Purple Chips model and is not intended to be a solicitation to buy or sell securities or investment advice. This presentation has not been approved by the author's employer. The information contained herein is believed to be accurate but cannot be guaranteed. Stocks can be risky and you should consult a professional before investing in the stock market. Today's presentation is about valuation ranges, and what we want to emphasize is the following key points. Basically, that we update the valuation ranges on a regular basis. You should check the website often because it is changing all the time. There's constantly updates that are happening. Valuation range changes are being influenced by, of course, earnings reports, so the progression of earnings per share. And for that, I'll show you an example with Oracle. They're influenced by valuation resets. Recently, we saw a case with OpenText, OTEX, or OTC on the TSX index. Valuation ranges are also affected by the valuations relative to the market. So we look at these things, and I'll explain all about that with an example with Priceline.com. And they're also influenced by known news. And in this case, we're going to use SNC in our example. So to start, let me look at the charts here. And here's an example using Oracle Corporation. So with Oracle, the key point here is that the valuation range is changing all the time. Every time there's an earnings release, and of course the progression of the earnings has been very, very good with Oracle. So what happens is that in effect, I'm just going to draw this for you. Back, let's see, at this point in time here, okay, the valuation range would have been something like, we would have taken, let's say, the high point here. Let me start over here. I'm just going to erase this. Okay, at this point here, okay, what you would have seen is that the valuation range would have been at the high end. It would have been based on the shape of the earnings curve. Okay, so you would have had the earnings curve going like that. And essentially, we would have said that the valuation range would have been somewhere between 36 and 27. And now that the earnings per share has gone higher, the valuation range is now higher than that, because if I take this earnings per share line and shift it up here, you can see that the high end would be $38 on Oracle, and the low end would be around $28. So that is how you establish the valuation range. Now let's go and look at some other examples of how do we decide the valuation and the valuation range, and how does it change? Okay, when there's something like a valuation reset, okay, and in the case of OpenText, okay, what you're seeing here is the chart going back to the inception of OpenText. It's symbol OTEX on the NASDAQ. And in this case, we had what we call a valuation reset. So when OpenText was up until very recently, OpenText had basically the low end of the valuation would have been something like this, and the high end, based on recent highs, was about like that. Then what occurred was that we had a valuation reset here, okay, and the valuation reset happened here, and so what happened was that the earnings curve shifted down to a new low valuation, and so in effect the new valuation range is being established. If we take the shape of the earnings curve, we would expect it to be somewhere between, let's say, $60 and the low end here, which is around 46. So that's what I would expect with OpenText, and that shows you how a valuation reset will influence our estimates of the valuation range. Now let's look at another example. This time we are going to use the example of Priceline, and this is a case where you have an expensive stock as something that has a high multiple, and we compare this to the market, and what we're trying to do is keep the risk minimal every time we invest. So if we indicate that something's at a low valuation, it's because the risk level is very low. And that's the beauty of following the Purple Chips model. So in the case of Priceline, we would say that the low valuation, the low risk entry point would be somewhere under 550, like 540. And the reason we say that is because we want to make sure that we're buying it at a low-risk entry point. So this would be an appropriate entry point, and the high end, if you owned Priceline, we would urge you to take profits at around 720 or so, which would be relatively high compared to its recent high valuations. So there's an example of us being conservative. So we're not taking the normal low end of the range here. We're actually going a little bit lower than that because we think if Priceline sold off, you would see it down to 540, maybe even 530. So we want to be conservative in our estimate of where to buy this. Now, another example would be in a case where there is news that affects a stock, okay, and we will change our valuation. Now, I'm just going to point out what happened here. Up to this point here, basically, the news was that the company was doing quite well, and then they had litigation that happened, and the stock, the earnings actually fell sharply, and the stock followed suit. So at that point in time, we decided that SNC was risky. We had bought SNC. We had bought it, actually, we bought it fairly low. We bought it down here, and we ended up selling it on this uptick right up here. And the reason we sold it was because the news hadn't come out yet. And the news did just come out then that there was litigation and there were issues happening, and there was some forecasts, some visibility on the earnings. And see, these parts here hadn't come out yet, but they were going to come out. And so we did change our estimates on SNC, and we actually ended up eliminating SNC from our list of purple chips following that news. So that's no longer on the list of purple chips. But that shows you how news can affect our decisions in valuation ranges. So this is all to say that it's very important to check the website regularly because we're constantly updating the valuation ranges on all the stocks, and we currently have over 245 stocks in the universe of companies that fit the purple chips model. So you should consult it often. Check the website all the time because there's plenty to see there and lots of things changing. So that's all for now. I'm John Schwinghamer, the author of Purple Chips, and thank you for watching.